Hello, everybody. It's time for a residential market update. And as always, I'm excited to bring to you what's going on in our real estate markets. There's always a lot to talk about with what's going on in our real estate in DFW here and with interest rates. And so let's dive into it. First of all, let's just kind of talk on a DFW level. DFW sales were down 8% year over year from last year, October of last year. And prices fell below the average, or the median home price fell below $400,000, which is the first time since the first part of the year. So we're continuing to see the market soften from a perspective of pricing. It teeters between, it's either flat 1 month to down as much as 20% year over year. And so one of the things that I want to point out to you, though, is when I talk year over year, I need to remind you that all the numbers I'm giving you are going to be from October of last year. In October of last year, the real estate industry, basically from a transaction perspective and pricing, it came to a halt. Transactions were into a deep recession, seeing transactions fall from the previous year 20 to 30%, and then prices had flattened out to were beginning to correct into the low single digits last year. So the numbers I give you now going forward, it's important that it's not coming off of a normal market. We were correcting this time last year. I like to say we hit a wall in real estate last year at this time. So I'm going to dig into these numbers and just want to give you that perspective. Some other good news that came in today is that inflation is moderating, and it was actually lower. The CPI read came in today at 4%, which is lower than what we had expected, or what the analysts had expected to come in. So that's why if you're looking at your 401k today's November 14th, and it's probably up because the markets are rallying. So when interest rate, what that means is that this interest rate hike environment is coming to a halt. The Fed recently said they're just pausing, waiting for data. This is the kind of data they're looking for to be able to not have to raise interest rates anymore and be able to maybe even go into next year and start lowering interest rates, possibly depending on the economic environment. So that's good news from a perspective of if you're a home buyer looking to get a mortgage, you just saw a 0.5 point drop on your mortgage. Go rebid it now because interest rates are dropping on the mortgage rate right now from, it was as high as 8% just 4 weeks ago to now 7.4 was the read today. And you could probably even get it lower than that. So that's kind of a general market update and where we're going. I'm super excited from a real estate perspective to see this interest rate hike environment slow down so that we can begin to normalize what our new normal is going to be, because there will be a new normal. We're not going back to low interest rates again, barring any catastrophe in our world and et cetera. So what I want to give you is kind of a county by county what we're seeing on the median price, what we're seeing from a transaction and sales year over year. This is median. I'm going to also go into average prices here shortly, but basically what we're seeing is prices for last month were flat to about 2 to 3% increases. Rockwall saw a 4% increase. Dallas County saw a 3% increase, and then you had like Kaufman County was flat year over year. And again, that's from last year, where basically what that means, if you're flat from last year, which last year this time prices had stopped increasing, so we haven't seen really prices increase since 2021 year over year, from a year over year read. So Interesting information. Let's go ahead and dig into county by county, our normal market update. I want to kind of give you guys an update on what's going on. So we have average sales price has actually increased in Rockwall County to 4.1%. Kaufman County is down 2%. Dallas County is up 6.6%. Collin County up 1%. So what we have been seeing is that the market tends to bounce back and forth. We end up seeing prices drop, and then we'll have a drawdown, and we'll see several contracts come in, and then that draws down inventory, which then again pushes up prices. So that's why it's just kind of bouncing back and forth from low increases to corrections in prices. So the good news for the homeowner is they didn't see any price drop from last year. And then we move on to how long is your home staying on the market? Rockwall County, it's up 33%. Kaufman County up 40% to 63 days. Dallas County up 14% to 33 days. And Collin County up 14%. So basically, homes are sitting longer. And again, I got to keep going back to last year this time, homes started sitting longer. And so they're even longer than they were last year. And that ultimately is what we need to get back to a normal market. Homes for sale, this is the culprit. 70% of America has a 4% or less interest rate on their current mortgage. So inventory is a huge problem, on top of the fact that in DFW, we have so many people moving here and not enough housing here. So homes for sale, inventory, in other words, is an issue and is what's going to keep prices up in DFW. We might see some corrections like we have, but it's not going to be anything significant because we have too much demand. So Rockwall County, homes for sale are down 7%. Kaufman County up 7%. Dallas County up 4%. Collin County down 9%. So basically they're all over the place. And I basically reading that, it's a read to me that they're basically flat year over year to maybe just moderately up on inventory. And we need a huge jump in inventory, and it's not going to happen. We just can't build enough houses. So that's the main culprit. We just still will continue for, who knows, probably the next 10 years having an inventory problem. Month supply is the next one. And month supply is going to be, how much are we in a buyer's seller's market? Rockwall County is 3.6 months. Kaufman County, 4.6 months. Dallas County, 2.8. Collin County, 2.6. Basically, we're all still in a seller's market. We're bouncing between a seller's and balanced market. So sellers, you're still in a seller's market. The problem is that pricing still has to come down in order for it to be affordable. And that's why your home is still sitting, and we're seeing homes sit longer. New listings, the amount of new listings that come on the market. Here's another, again, homes for sale, inventory, new listings. That's how many new listings do we have coming on? That's the big problem. Rockwall County's down 1%. Kaufman County up 12.7%. Dallas County up 7%. And Collin County up 11%. So, we're seeing bigger jumps in Kaufman and Collin County in inventory. But in general, I would say new listings are coming up from last year, but last year is not a good metric because last year, new listings this time it felt like zero. We just hit a wall. The seller said, I'm not putting my house on the market to get a 7% interest rate. I got 3, 4. Now we're beginning to see those sellers get tired. Hey, I want a new home, or I want to downsize, and it's worth the effort. Now we're on to pending sales. This is an indicator into November. Rockwall County down 12%, 14% down. Kaufman County, Dallas County 4%, and Collin County down 0.7%. I think the key thing to understand, and I'll go to closed sales now. Closed sales are down 15% for October, 25% for Dallas County, and 6%, 25% for Kaufman County, 6% for Dallas County, and Collin County, 5%. The thing about the sales is that those numbers are down, and they're really down last month. They're down quite a bit this month as well, as far as what it looks like it's going to be into November. But the key thing for you to understand is that sales are down from a year when they were hammered last year. So when we look at DFW sales, they're down 36% from 2020 sales. 36%. That's just, we haven't seen that low of sales in years. And so the real estate market is still in recession from a transactional standpoint, and will continue to be for quite some time. But that is what's going on. We're not seeing as many transactions being done as we are normally accustomed to. We expect to start to see it get back to moderately better next year. Normal transactions is probably going to take a couple of years before people are going to want to get rid of their 4% interest rate. So it's really made a huge shift in the real estate industry as a whole. You're seeing title companies, mortgage companies, banks with the lending arms of them are all laying off, real estate companies laying off, CBRE, commercial real estate companies laying off, because it is just shut down transactions in a lot of ways. Well, in every way. But it needed to happen. We're just kind of vetting things in many ways. There's too many real estate agents in the market. And prices are just out of control. Affordability needs to come back. It's beginning to, slowly but surely. So that's my market update. If you need anything, please reach out to us. Residential, commercial, property management. We're your one source. Nothing but 5 stars. Would love to serve you. So reach out as soon as you can. Have a great day. Bye-bye.